Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It's Tuesday. Markets still kind of look like they're in a holding pattern until we get the CPI numbers tomorrow. But let's go and take a look at what we got going on right now. So, where's my volume profile chart? Here we go. Okay, so in the Treasuries, well, we haven't moved too much. I mean, that is one of the smallest range days we've had in months. And there have been some days back in here, like at the beginning of the summer, that were pretty tight, okay? This is really, really tight. So like the market is really, which I find so bizarre because I really don't think that there's going to be anything that crazy in the CPI, but the market is really anticipating it. Okay, so here we got the S&P 500. And I had a little bit of a rally late in the day. They're kind of like erasing it overnight, so not much of a change there. Oil continues to push up. Negotiations with in Australia still kind of going on. All the things, it just looks like oil is headed up. Gold and silver, though. Ooh, what happened to gold and silver? That was a big drop there without an accompanying drop in the treasuries. That's a little... What's with that? Well, and what about silver? Silver, too. And not copper. Okay, now that is incredible. I have not seen silver and gold drop on their own like that in a long time. So something's going on in gold. Here we got Bitcoin. Bitcoin taking a bit of a dive yesterday, but it looks like the plunge protection team in Bitcoin is at work this morning, man. I need to back up. Like, listen, they cannot allow it to be under 25,000 for very long. Okay, the Bitcoin market would be in big trouble. So, and the dollar rising this morning after having fallen the day before. I find that I'm gonna flag that in Discord. That one is a little weird. Good morning, Alan. Good morning, Octavius. Well, I don't know. It looks like here on the open that they are heading upwards. Oh, where's my... Do I still have it? Oh, I do still have it open here. Cool. So am I up or down? When I went to bed last night, I was down. Now I'm up 2,500. Okay, so the amount of leverage on this thing is a little scary to me. Like, I was looking at these eyes like, how did they get 10%? And now I'm looking at it like, oh, I see how they did it. Yeah. Leverage. Okay. So, fixing my monitor here. It's a little bit off, it seems. Try that. There we go. Okay, so to the Twitters. Does look like the flow from the open is long. But it also looks like we're getting the flattener coming in again. So they're selling the short end of the curve and buying the long. I'm reading some of the funny headlines from the politics yesterday with Joe Biden not attending 9/11 memorials but claiming that he was there on that day, and people calling him out that that's a lie. It's all crazy. Okay, so I really want to know what's going on in gold there, man. That's a little bit of a bizarre move, in my opinion. Is gold taking the hit because of oil? No, because oil is on multiple waves up here. And the crazy thing is that we're seeing the bonds, especially the long end of the curve, buy here. And gold is still dropping. So something weird is going on in gold. I mean, I wonder if that makes it a good, reversal trade? Seems dangerous to me, though. Okay, so Justin Sun was supposed to respond to the SEC lawsuit against him, and we hadn't gotten anything yet. That's interesting. I wonder. It seems like Rhett, so I'm looking at gold, but I also find the movement in Bitcoin really curious. I didn't see any headlines yesterday. There has been some talk in Bitcoin. That's true. There has been some talk in Bitcoin about death crosses and all of this. So I guess that could be one factor that's going on over there. We did have a pretty good wave there. Long, it was mostly in the 30-year, the 5-year actually net sold. So there was definitely somebody came in and put a flattener on. Good morning, Wealth Talk. By the way, you've been here pretty consistently now. I appreciate it. It's good. It's good to have a new super regular person come in. Anyways, there's a real flattener going on here. I mean, doesn't flattener suggest that the bonds are going to come down and interest rates as a whole are going to move up? Ooh, you know what else? It's the 10-year auction today, huh? That's the big thing we got going on today. So you should keep our eye out for an iceberg. We had some pretty big icebergs yesterday, so I gave you some great ideas yesterday, really? I don't know if I... Because I don't feel like I really had any great ideas yesterday, is that... I find that a little disconcerting. Do you think gold is going to reverse today? Cuteness overflow? I do, but I do not believe in it enough to put my money on the line. I don't believe in it. I don't even believe in it enough to like hold gold up and put a sim trade on it. But I can only say that what is happening in gold seems incredibly unusual to me. It seems incredibly unusual to me. I can't figure out why it's selling so hard. Seems like something fishy. Oh, it was the 22 Ninja. Well, that's not that old. That was January. So that's actually one of my more recent videos. Man, look at the 30-year. Keeps going up. Keeps going up. And it's actually dragging the 5-year with it now a little bit. Yeah, well, that's good. Once, I put all those tips, I put that video together because those are kind of the things that you can do in NinjaTrader that I think are somewhat unique, and that a lot of people don't think about. Because really, the world of technical analysis kind of goes down this one kind of road, right? But then there's this other world of like correlated assets and order flow and all of these other things, and it's a completely different path. And everybody gets so focused on the technical analysis thing that we don't often see some of the most useful features in our software. Oh, you're up 6 points on. Well, that's not bad. Especially if it's a long here this morning. Because you're getting a pretty decent trend here the past hour. How much is that? 24 to 30? Yeah. It's about 6 points. You bought the bottom, really? Well, the day is just starting, my friend, so I don't know, today, because, from a fundamental perspective, and we're looking at what are the flows going to be today, the biggest thing we got is that tomorrow is CPI, and it seems that people are afraid to put on a whole lot of risk before CPI for whatever reason. I haven't seen anything. I tell you what, I'm definitely seeing news outlets trying to set like narrative. Zero Hedge is pretty much all in on the inflation number is going to be higher and interest rates are going to rise. They're very, which I think is interesting. The story that they're pointing to is that there's a methodology change in the CPI number. And Goldman did some analysis on it. I think that most of the analysts understand that methodology change is going to happen. And I don't think that the market is going to care too much about that. I'm also not 100% sure I buy into the idea that for this report, that the risks are to the upside, that the inflation is higher than anticipated. Because we've been seeing a lot of deflation over the past month. And a lot of like the economic indicators and so forth are kind of softening. So I'm kind of leaning towards that the number is going to be better than expected, that inflation will be less than the analyst reports. But we'll see. But at the same time, if it is like less than expected, it's going to be by like a tenth, like it's not going to be a huge deal. And in fact, I actually think that what you might see happen is, well, there's definitely going to be volatility off of the news. You might even see them sell, like they might even say, oh, okay, like it's in line, and then they sell, but then they eventually realize that everybody's short and they cover all their positions and we move up in the treasuries. That's kind of what I'm thinking is going to happen. But I'm not expecting like a huge surprise. But the market is set up in a way that they're expecting a huge surprise. I'm thinking we go down towards yesterday's iceberg and just fall through it. Call me a... You know what? That was an interesting iceberg just because under normal circumstances, 10K is not that much. But in that situation, it being really quiet and everything, it ended up being a pretty good long trade. When ZN opened, I saw 8K market sells into the market. It didn't move. That's not... Oh, yeah. I did not catch that. It looked to me like the open was basically longs coming in. It's kind of funny. We're getting the bull flattener. We're getting the bull flattener, which is not in line with the it's optimal for my trade. It's optimal for my what is it for my oh hey, see, look, now I'm in the top 100 now. Wow, there's that many people that are above 3,000 profit. It's good for my trade, obviously, but yeah, this is a small move, so but speaking of icebergs, though, we're probably going to see a big iceberg in the 10-year today. When we're having a 10-year auction, I often see really big icebergs because there's a lot of dealers out there. They got to hedge their positions. There's a lot of money coming in the market. You tend to see like interest rate locks and those sorts of things, which I think perhaps makes it that much more curious that they're starting this morning out with a pretty strong trend. Okay, well, let's go around and see if we can find some new stories. Oh, what was this? I would normally buy the HMA 17 across in the EMA 50, but your insight gave me new thought. Oh, okay. Well, I usually don't look at moving averages, so... BlackRock closes China equity fund after congressional scrutiny. Futures drop on Oracle weakness ahead of iPhone 15 reveal as CPI looms. The equity market looks pretty bullish to me. I guess we are net down overnight, though, aren't we? I tell you what I'm seeing right now in the S&P 500 is the pretty decent amount of trend here. It's a reversal and strong trend coming off of this. And in fact, they're maybe even getting a little bit ahead of themselves. Do I have this on the wrong instrument? I do. I never switched over my ES. Oh my gosh. Should be ESZ. That's a little better. U is a range. Well, so, okay, the S&P 500 is the one that I do have some indicators on, but since I don't really actively trade it and everything, I don't know if I can really say exactly how useful this stuff is. I have a decent amount of back testing to suggest that this R squared indicator is like one of the most useful technical indicators that you can have. And basically what it tells you is how trendy it is. When you get in like a really solid uptrend like that, then it starts to go up towards 1. So you can see that it's suggesting that we had a really strong trend here. It appears to be moderating now. But I would like to get in something, you know, when it's exhibiting that kind of strong trend. And kind of the back test that I have is kind of suggests that when you're getting that amount of trend and the order flow is in line with it, that you take the trades. This other line right here is the NASDAQ versus the S&P. So it looks to me like it is tech names seem to be pushing the equity indexes this morning. And since we have an Apple event today where they're supposedly going to announce new iPhone that has USB-C connectors instead of the proprietary Apple connector, and also they'll be launching in India same day or whatever. That's a big deal apparently, and apparently part of it is made in India. That's pretty big news. So maybe that's what's driving the equities here at this moment. The 30-year came back pretty quickly there. There was a little bit of an iceberg at 12 though. So I think let's reset things right there. Not a whole lot on like zero hedge. How many trades do you forward test before going? At least a month. This is on Reddit. Michael says the R squared was a clue. Ah, well, there you go. Yeah, I guess I can see that where that might have gotten you in. Interesting. Ask Economics. Are U.S. citizens really strong? Okay, so this is something that I noticed yesterday. It seems to me that the country is still kind of living in this bizarro world of competing narratives when it comes to economics. I kind of thought that the summer kind of like resolved a lot of those issues and set us on a pretty direct, like, here are the questions going forward and here's the possibilities for the next stage of things. But when I start talking to people like on TikTok and stuff, doesn't seem to be the case. There is in particular, it's really, the thing I find really interesting about this, I always tend to put like those little prepends on it, you know, this is what's interesting, but in this case, this is really one of the things that I find extremely fascinating about the market right now, is that you've had these kinds of like stock market conspiracy theory style movements, and they've been very much right wing in many of the instances. Like there's the silver bug subreddit, for instance. There's super stonk, and I feel that a lot of that is kind of drawn in a lot of more right wing people. But something that has popped up on the left is real estate bubble. So there's a subreddit for real estate bubble, and oh my gosh, it's reading that subreddit is so fascinating because it's you know, your typical far left Redditor coming in and saying like, you know, this is wrong with housing, etc., etc. And then people that actually know what they're talking about coming in and like correcting. Because there are people like, this is an issue on the left that, you know, access to housing that people on the left have been working on for a long time. So there are people over there on the left that actually know what they're talking about and do know the things that would help housing, which tend not to be the things that the politicians have been doing. You need to build more houses, but you know, they're getting there. They're working on it. I think maybe eventually we'll start doing it. Okay, so there's like a lot of like narrative busting over there in that subreddit, but this group is larger than I thought, and I'm seeing them all over TikTok. So for instance, the reason what this kind of got flagged to me yesterday was I came across a video where this guy was saying, you know, realtors will tell you that if you can afford the payment, that you should just go into the house now. Because, you can, if interest rates go down, you can refinance, and the prices are likely to continue going up because of the supply problems and so forth, right? And this guy was saying like, oh yeah, well, it's not like the realtors need to say that so that they can make money, And I agree with the realtors. Like, look, when we look at the current best economic trajectory, like information that we have right now, it suggests that the economy is going to continue at a reasonable pace, and that the soft landing is possible now, and that by the end of 2024, we will probably be reducing interest rates and bringing them back a little bit. So if we reduce interest rates, prices on houses are actually go up, right? Yeah, I show you the chart. So here is the Case-Shiller National Home Price Index. Let's kind of tighten it up here. So you can see that from about summer of 2022 until the beginning of the year 2023, which was when we were seeing interest rates rise the most, right? You saw prices come back a little bit, and then since interest rates have normalized, prices have gone back up. If interest rates go down, so interest rates going up means prices come down, and then vice versa. If interest rates come down, prices go up, right? So you actually get a better price now on the house, and then you refinance it, you'll probably get a lower payment. Another way of thinking of it is the payment is the payment. Like you're going to say, this is how much I can afford, and you're going to go and find a house that matches that, right? But you're going to get more house, and you're going to be putting, in the end, if you refinance, you'll be putting more money, more equity into it, right? Because the lower the interest rates are, the more your money is going towards equity, right? So unless we get a recession, I really don't see a housing crash that there's this huge contingent of people are looking for. I really don't see it unless there's like a full-on recession, which is still possible. Although I don't think that the economic data points to that yet. But that economic data could flip around and, well, I mean, it's looking kind of to the downside. It could just real quickly, right? When you go into a recession, it's often shocking just how quickly it happens. But they're all convinced that the housing crash is going to come. And, they were saying like, oh, people are losing money. And I was like, well, yeah, but look at the economic data. Like, the economic data that's not what's happening. It's not what's happening. Yeah, house prices came down a little bit when interest rates rose, but overall, not a big change. I'm interested. So we did definitely get a steepener trade that was placed on here. Most of it has unwound again. So, and it's kind of curious how closely the peak of that seems to correspond with the equity market peaking. So I think, oh, you know what? There's something interesting going on in the Japanese yen too. But the dollar was moving there. So I think that's what we were seeing was just a small currency movement, and now the bonds are kind of evening back out. So are they going to turn and be on the sell side from here? Is a possibility. The cumulative deltas and everything are still a little bit too wild for me to tell. Micro got out at a good spot though. 25. Oh, well, 45, 20, 29, 25. You must be talking about like the NASDAQ or something, huh? Or YM. Nah, even that one doesn't make sense. I don't know what he's in. Why being a nonconformist is exactly what your company needs from you. Cool. Because that's my thing, I think. Also, there is a little bit of an iceberg there, 25 half. See 17.99. Tammy has wing nut. There you go. Like by and large, I think the sorts of things that kind of drive conspiracy theories tend to be pretty bad for you from a trading perspective. And that's one of the reasons why I kind of follow these cults, these stock cults closely. Because they seem to create some volatility, right? Maybe now that all of the meme stocks have kind of died, because Bed Bath & Beyond is pretty much dead. AMC is basically gone. Well, Bed Bath & Beyond is dead. But AMC is almost gone. Pretty much lost all of its gains. Yeah, because I'm just kind of wondering at when they will turn their attention to silver and gold. Because if there's any asset out there that I feel like is like manipulated, it's Bitcoin. But then if there's anything other than Bitcoin that I feel is manipulated, it's silver and gold. The banks like to keep that gold under their thumb. And that's the one where, you know, there was convictions for spoofing and so forth. The Hill says, Lee, a Category 3 storm unleashes heavy waves on the Northern Caribbean. You'd think that that'll cause flooding if it cuts into New England? I've kind of been following that one because they sure talk about Lee a lot for a hurricane that doesn't look like it might not even make landfall. Maybe the news just don't got anything else to talk about, though. Oh, man, my bonds are going to be touch the low of the day, maybe. See, that iceberging at 25 kind of says to me that we might continue going down. Well, let's see. It's on both sides, though. So it could be that they end up really liking 24 half, right? Oh, that could be a really frustrating session if they decide that 24 half is the price. Oh, oops, I forgot to turn off my... I always forget to turn my speakers off, man. I need to put it on my checklist. Starting to see on Reddit the devices, the USB-C devices for Apple. Uh-oh, what's this? Let's read this story. Okay, the New York Magazine claims that Trump's economic plan is to raise taxes on the middle class and cut them on the rest. On the rich. Dum-ba-dum-ba-dum-ba-dum-ba-dum. The Washington Post reports, well, I don't trust anything that the Washington Post says about what Donald Trump's economic report is if he hasn't put it out yet, is working on a new economic plan to anchor his campaign. Yeah, you know what you need to do is you need to give a plan for how we're going to reduce the cost of housing in this country, because that's what voters want, my friends. The leading idea is to pass another huge tax cut for the wealthy, paired with a tax increase on the middle class, a 10% tariff. Oh, okay. So they're calling tariffs. They're calling tariffs at tax increase on the middle class. Gotcha. See, I thought that there was going to be something shifty about it. Well, I tell you what, Michael, the S&P 500 is moving into an interesting time period here, because this is the time when, like, the ES traders come in and start doing their thing. Like, activity starts picking up. They usually don't trade those first 30 minutes, especially if there's not, like, economic news, right? The equity traders, they don't come in until 30 minutes before. So this is when they start hedging with the futures and all of that sort of stuff. They retraced that really strong trend awfully quickly, didn't they? So maybe they're going to be on the downside. It looks, though, like this is still being driven largely by the dollar. So we may see the E-mini start something. But whether it's up or down, I could not say. I suppose I would maybe be leaning towards it reverses back around here. But I don't really have anything that tells me what the flows are going to be. Just that I know that this is a critical time period where a lot of large meta orders start in the E-mini. Yeah, I think these moves are largely about currencies. Okay, so there's a 5K at 24. So this is the kind of activity that I was kind of looking for. So it started with the 2Ks here. Now they decide to tick down, and there's even more. Octavius, was it? Or was it? Yeah, Octavius pointing out that there's a 5K down below us at 20. I'm not too sure that's too big of a deal. Actually, let's see here. Well, it's really that 24 is the even number. So it not being at an even number, but is it at like a key overnight level or something? Yeah, the low is at 23 though. Maybe that big order is important. Or let's not say important. Let's say unusual. Ah, okay. It's yesterday's low. That's at yesterday's low. So it's not unusual. Would end up being a key point if we get down there, though. Yeah. Would it be a new 2-week low? I guess you could say that. I would just put it as that's the weekly low. That's the low since like last or Wednesday. Since last Wednesday. But you know, you go back into August and there was a point where we were much lower than that. So but at the same time, I'm not convinced that it's the flows here in the treasuries that are driving this. Okay, 4K on the offer, but they clear it and tick up. What I'm seeing right now is a tight liquidity. Like, the liquidity isn't pulling. There's a number of icebergs in here, right? Like, we've seen a lot. We've seen like 4 different icebergs here in this spot, and we've seen them both bid and offer, right? And when we've seen a trend up and a trend down, the flows in the treasuries are kind of a little iffy, not super strong. It looks to me like that we're having a market that is being moved by currency correlation, and at the same time there are guys over here doing some pretty big transactions for the auction, but that there isn't any kind of clear imbalance for it. So that might mean that we might get some interesting movement off after the auction when that happens at like what, 1 o'clock Eastern time is usually when they happen. Yep, 1 o'clock Eastern time. I just noticed my ZT charts on NinjaTrader 8 are a tick off. That's interesting. Dollar oil. Well, when it comes to the currency correlation, I can definitely see everything moving along with the dollar. But then when I look at it, the 6E moved there. I can see this, the 6E moved. The Japanese yen moved with it. The British pound moved there with it. So it seems like it is just the dollar in general. It's not correlated with any kind of movement in oil from what I can see. Because that was one of my first thoughts, is oil, is because, there's all of these correlations with the dollar and oil and so forth. I thought, okay, there's something going on in oil, but it doesn't seem like that. It seems like the origination of the flow is just the dollar. That money was coming out of the dollar and going to everything and then came back or something. So it seems like kind of an oddly strong move, but got about 30 minutes. Oh, you know what? I never did a commercial. Let's drop a commercial in here. This is a good spot to do it. YouTube loves the commercials. It does seem to me, I know it seems crazy, but it does seem to me that the stream has been getting more viewers since we started dropping commercials in. For sure, but we need confirmation, yeah. Well, we're going to see here, the Treasuries, one thing that might be going on is that, let's just say that everything else that I said there is correct, but that for the auction, there actually is an imbalance in its sell. That's kind of something that I think is still there. And I guess the only reason why I say that one is because they're pushing those lows, right? It came back awfully fast. They're pushing those lows. Is kind of, there's a big order down there that they might go for Like, this all seems set up for like a level break sort of, just they break through there and then really move sort of a thing. They definitely seem set up for it, but the reason why I'm kind of taking the one that choosing the take that I am here is because I know that this is a really, really tight market. And so if I'm seeing something that really makes me think that like we're about to have a breakout trend, they're probably trying to fool me. But could be legit. Like if you get a downtrend on the auction day like this, because there is a lot of supply coming into the market from these auctions. And the auctions is where we should be watching to see if we get higher interest rates from those, that it's the extra issuance from the Treasury that ends up really causing problems, So I'm curious to see if another iceberg shows up there at 24. I'd be surprised if it was like a 5K, but I think that there's going to be at least 2 or 3. The E-mini sure puked there, didn't it? What instrument are you trading, Michael? Because there's nothing on my board that is near 2300. MES? No, but MES is like 4521. Am I crazy? No, I'm not crazy. I see. You're only doing the last 2 number. I gotcha. Okay. I understand now. Well, I said this is a point where you tend to see like flows shift in the E-mini, right? It definitely did it. They definitely started at the top of the hour. It was a sell, so it was a continuation of that downtrend. So let's just note that we are not seeing like any kind of strong correlation between equities and treasuries at the moment. It seems that the treasuries are following the dollar correlation really closely, and that dollar correlation could be affecting the equities as well, but the equities are kind of doing a little bit more of their own thing because of the time, because we're coming into the open and everything. I do think coming into, and like not for today, but like for this week overall, I think my bias on ES is short. It seems to me like there's a little bit of risk of downside. And if you don't get it, then you could start getting squeezing behavior again, right? But who knows? When you have an Apple event, Apple events affect the market too much, right? Thank you. I love it when I read something on Reddit and I'm like, that's wrong, but somebody else has already fixed it. Somebody else has already addressed it. Cool, I don't have to type something. Or are they set to unveil next generation smartwatches at today's product launch? Oh. Oh. There is a decent amount of Twitter activity out there, just not like among the traders. Traders are quiet today. Treasuries have kind of been sitting down here at the bottom of this range for quite some time. Why are the rollover date of contracts different from each other? Some are Z, some are U, some are V. Okay, so the Z, U, V, etc. is the expiration, right? So Treasuries and the S&P 500 E-mini futures are on quarterly expirations, which means that they will have moved from U to Z. Or no, not U, it's it was like M. You know what? I had them all memorized and I haven't been keeping up on it. Give me month codes. I think it's Q. Oh yeah, it's Q. August was Q. Right? So we went from Q to Z. Or were we on U? I forget which one it is. No, it was U. You're right. It was U. Yeah, so you go from September to December, right? It's quarterly expiration. Okay. But if you are on a monthly expiration, right? The September expiration is U. And if you're on one that's already rolled over to the next month, then you're going to be on V, because V is October. You go here, understanding contract codes, right? I don't know why they have the scheme that they do, but those are the month codes, and I would recommend memorizing them. Clearly, I need to rememorize them. I think I have them memorized, like, if I go start from January, F, G, H, March, and then May is K. Or, no, April is J. May is K, yes. June, M, N. And then August goes to Q, U. And then October, V. November, X. December, Z. I think that they chose those last ones like VXZ because those are like cool letters, right? VX and Z, those are like the cool sci-fi letters. Gotta have those in there, right? Yeah, we sure have been here a while. The bonds were kind of starting to keep falling, but they've rebalanced back to the 05, like where their point of controls are. So the next key point would be the open, and sometimes you get a little bit of a move in the treasuries around the open. I'm seeing a little bit of a flow long in the 5-year there. I don't know if that was enough to be significant, but it does. Do you see it on my chart now? Oh, there's a little bit of liquidity above us in the 5-year too. That's curious. Kremlin spokesman says Russia will no longer speak to Scholz and Macron and accuses them of surrendering sovereignty to the U.S. and becoming vassals. Okay. They weren't against this Ukraine war on their own. Really, Russia? Really? That's your argument. As well as, you know what, my kids do this all the time too. So, you know, like I'll say something and then the argument that they come back up with is like, I can't imagine what would ever make you think that that would be an effective argument in this house. And it's the same thing as like, oh, you're vessels of Washington. Okay, what makes you think that that would be an effective argument in any European country? Like, yep, we pretty much go with the U.S. on everything all the time. Yes, they actually, you know, to say that like they're going against Washington would kind of be like, wait, hold on a second. Maybe we don't want to do that. Oh, really? Okay, so my news squawk just said something that I did not know and should have. That says that the markets are pricing a 50% chance of a 25 basis point hike from the ECB. I did not know that there was that much uncertainty around the next rate hike in the ECB. It's curious to me that there is so much more volatility baked in for CPI than there is for the ECB, because that would seem to me to be something much more likely to really drive big flows this week. So I still don't think that the CPI... I think the CPI is probably going to come in line with expectations. Probably. What are the... I think the expectation is spot 3. Let's go check. Oh, okay. Yeah, CPI is spot 6. Because oil has gone up. But core CPI is actually spot 2, not spot 3. Yeah, I think that they're probably likely to come to spot 2. Maybe spot 3. I'd be really shocked if it was more than spot 3. But even if it was spot 3, I don't know if the market will react to that strongly. Iceberg at 24.5. Oh, iceberg at 25. You know, I should have done what I had done yesterday and gone for the mean reversion trade around 20, like leaning on 24. And then maybe could have taken the 4 ticks out of it there. Okay, so I'm not seeing like this is only like 1 or 2 bars where we're having a order flow to the upside, but we are starting to see a little bit of upside here. Let's do a commercial break just before the E-mini opens up here. So is this flow going to continue? Well, then the other question is that if this long flow does continue, would it be enough to bust the highs? I'm a little skeptical about their ability to bust the highs. Especially in ZB, that seems like so far away. It's not that big of a deal for ZB though, is it? So on this move, the 5-year seems to be leading, the 30-year seems to be trailing. I'm not seeing that big of a change in the spreads, but it does seem to be the way it's going. Are we seeing a corresponding change? Yep, it's the dollar again, isn't it? Oh, you know what? Do you think maybe... I could be way off base here, but if I look at the Japanese yen, you look at the bottom indicator here, which is like the JPY USD or USD JPY or whatever, you know, 147 even. Those are kind of where the technical levels where you'll tend to see like, those are the round numbers where you'll see weird stuff and like intervention and so forth. So like, Japanese could be involved here. I find it really curious that that's the point that we come back to is right there at 147. I don't think that that's a coincidence. And then we start to see buying take us away from it. Man, my nose itches really bad this morning. Zelensky says Ukraine waited too long to launch counteroffensive. Yeah, that's... seems like that's what happened, isn't it? Hmm. Okay, 30 seconds till the E-mini open. Jason Furman, we asked students their view of the employment effects of the minimum wage and compared their answers to the views of the leading economists. The biggest difference, our students are much more certain than professional economists. Okay. So far, flow in the E-mini looks pretty balanced on the open. Kind of trying to dig it out here, and it's so far it's not. It's not really going. They might make another run for that 20. 45.20. Maybe. Okay, a little shift there. Okay, busted the top side of the range. Dollar. Still kind of on the edge there. Well, this rise in the treasuries may just be because of the change in the dollars. So it could be that we continue to see this kind of like lots of icebergs kind of behavior. Let's see. Nick Timmeros tweets, Wall Street forecasters expect the August CPI to show headline index rose spot 6 in July, boosting the 12-month rate to 3.6 from 3.2. They see core CPI up spot 2, lowering the 12-month rate to 4.3 from 4.7 in July. Thank you, Nick. I already covered that one. Oh, look, there they came back. They came back without a change in the dollar. And those flows that were going long basically completely collapsing back in on themselves. And E-mini looking pretty bullish. You think $90 in oil by the end of the week? Oh, I don't know about that. I think that we will see $90 a barrel this year, if not $100 a barrel. But the time frame for that, I'm not sure. I don't know if, you know, the way that the flows are set up here and everything for this week will lead us to 90 or not. I suppose it depends on what the gas stock numbers end up being tomorrow. Right? Because if you get another draw, there's another draw on the forecast tomorrow, then definitely you could see 80 before the end of the week. Or sorry, 90. But I think to really trade, for me to really trade oil, I would need to be having one of those spreadsheets that says like, here's my expectations for the weekly numbers each week and everything. I have to do that kind of fundamental level of fundamental analysis, I think. Yeah, back to previous range. Well, they didn't like push through and start pushing the other end of it. It just came back to where it was. And where it was like what? Up 3 ticks? Went up 3 ticks, came down 3 ticks. See if E-mini does anything interesting at that 32 and a quarter. Citi says wealthy families pile into bonds and private equity while shedding stocks. I don't know if that's... That may just be like, oh, take some profits and maintain your distribution. I don't know. How important is it to look at correlation coefficients? Well, so I don't tend to look at the coefficients per se. Like, yeah, you know, you get those like those big old charts that say here's how correlated these different assets have been over the last time period, sort of a thing, right? I don't look at it in that way so much. Instead, what I'm looking at is flows, and I want to see like when were the flows correlated. So often what I'm looking at is like, did these two assets, if there was like a pivot, right? If they were trending down and now they started trending up, okay, then did these two assets turn at the same time? Was the order flow in the two kind of match up with each other? Or like, in the case with the dollar, what you see a lot of the time is the dollar moved and the treasury moved. Well, when you look at the cumulative delta in the treasury, it's kind of like there wasn't actually a whole lot of a change in the market orders. So then that really was just the robots changing their bids and offers based on the correlated asset, and not actually from people taking a lot of trades over here in the treasuries, right? And so that's why the correlations end up being so important to us when we're trying to trade order flow, because you kind of have to be able to interpret, oh, okay, like we did move up. Why did, okay, but that wasn't actually because of the flow. It was because of the correlation, right? If it was always the case that you had to have a strong flow of market orders to move the treasuries, then this game would be easy. This game would be easy if that was always the case. But you have to be able to look at the nuance between when is it that people are coming in and are explicitly buying treasuries, like money is coming into treasuries, versus we're moving around on correlations, right? To be able to even begin to really analyze flows. Hope you're doing well. What's the levels? Gambling with my last 2 years of university tuition. No. I don't know what levels would be really key in DES right now. If I'm sure that there are certain. We have a big options expiration this week, right? And I'm sure that there are some levels that matter a lot to the options, but I don't know what they are. But that kind of just leads me back to this week is kind of set up to be tight. I guess I should note here that we are starting to see a little bit of a recovery in gold. They're trying to dig out at least. They haven't come beyond like a pullback, but they are getting a little bit of a pullback in gold. I'm seeing wheat push to new lows here. And wheat and soybeans are the biggest losers on the day. Soybeans being down 0.8%. Biggest winner is oil up 1.6, of course. Followed by RTY at 0.15. So most markets are down just a tad bit this morning. Oh, and they took it offer at 24.5. Not a lot of orders to do it, though, did it? Did it take... Nope. It's definitely correlation. But I've noticed that the dollar kind of pivoted, maybe. So they may be betting that the dollar is going to come back up here and start pushing back towards 104.88. They may be making an explicit bet there. But I also say, you know, it's curious how long we've kind of held this bottom of this range in the Treasury. Is like, kind of goes sideways here. There's a little spike. You go sideways. There's a little spike. Now we're back down here. We're going sideways a little bit. But maybe this time they push the other side. Let's see. You know, earlier I had said, oh, I should have leaned on 24. Well, now that it's done that like twice, I don't want to tempt them. Right? What? You know what? I'm not going to read that headline. I read a weird headline and I couldn't help but be like, what the F? Oh, there's the E-mini. Are they gonna make the push? It's looking promising. Come on. Okay, they did breach it by a tick. Yeah, it looks like they're gonna play footsie with it. Where do you get the background music? It's just Streambeats. Streambeats.com. They have a Spotify playlist. Streambeats by Harris Heller. It was kind of funny people get asked that so much because it's basically like the most popular and common royalty-free streaming music. It's good music though. The guy that makes it knew what he was doing. Sometimes, oh no, I got disconnected. Sorry about that. I temporarily lost the connection. I think we're okay though. Okay, so this guy, Zeke Foe, is being retweeted by Bitfinex, who is a prominent anti-Bitcoin guy. Uh, from the beginning, I thought that crypto was pretty dumb, and it turned out to be even dumber than I imagined. Oh boy. Maybe I should get that book. Sounds like a book I would enjoy. Franklin Templeton files with the SEC to offer a Bitcoin ETF. Okay. I'm sure that yours will get approved with all of the other 8 that they've denied. I'm sure. I'm sure of it. This time, this is the one, guys. This is the one. I'll allow it. Prices are pushing down? Which prices? ZN? ZN, is looking promising, like they might actually break the bottom end of this. Spoos breached the swing high from before this and are already fizzling out. What do you make of that? I don't know. I'm thinking in ZN, we might see a little bit of a trend down. Heck, we might even see them go down to the weekly lows and even breach the weekly lows. But then I bet that it reverses a lot. Like, we're likely to still be relatively range bound until CPI. You say, well, it is now. Yeah. Oil. Kevin says oil is popping hard today. I was just thinking, well, I mean, it's overnight, but it's and then I look over the last 10 minutes, it's popping hard. Like when we looked at it before, it was like 1.6%, and now it's 2%. Hey, maybe we do hit $90 even before. I suppose we could hit $90 even before tomorrow's oil stock numbers. Yeah. $0.40 since we've started watching it, right? Yeah, I mean, I'd say I'm bullish oil going into the end of the year. I'm just kind of like unsure, like, I haven't done anything because I don't know what a good play on it would be. I feel like that the things that I'm looking at, I mean, I could just swing the futures, but that's too much risk. You know, I was trying to look for like some options, a way to really get paid from it, and I'm just not seeing it. Yeah, I guess I could swing MCL. Like, I'm still like traumatized from last time we tried doing that, right? You remember that? Oh, that one still, I still have nightmares about that, man, because I was so totally right. I mean, I had it dead on, and I just didn't have enough risk to be able to make it through the push against me. If I had held on to it and like really been able to swing it, then I would have made a bundle. Yeah, 100 ticks on mini CL is $100. Yeah, but when I was trading, don't you remember? It was like I was trading mini CL and it was like $1,000 or something I lost from messing with it. I was probably doing some overly risky things with it too, though, huh? But my goodness, it was moving. I mean, that thing moved so much, and I was long, and there was like just these insane pushes short, and then the day that I was like ran out of money, basically, it was like I can't play this one anymore. It reversed, and then it was all up from there, and then you had the Ukraine war and all that. I don't remember anymore, to be honest, Kevin. It's too long ago. I must have been doing more than one lot. And was it really $1,000 net? I don't know, but we were talking about a time when it was moving like $5 a day, you know? Like it was pretty bonkers. So Well, the treasuries have pushed down into this bottom end of the range. They haven't fallen out yet, but it's still looking kind of like there's a decent amount of liquidity here and so forth. So I know. After that, I was kind of like, let's just stick to treasuries for now. Because I don't think that I have enough of a handle on oil to be able to pick good prices and make that kind of a play. Now, I could do it like with, you know, like I think the one that makes more sense to me is like doing it with options, but it seems like the options are too expensive right now for it. I guess I could try looking at it again. See, those orders at 23, they're not pulling at all, even though they've been hit by about 300 contracts now. So that's not to say that they can't get down to 20, because there might be a real imbalance short here, but the liquidity providers are looking to keep it tight. Okay, let's see here. New USO, United States Oil ETF. Wow, 7,000 contracts at 23 now overall. So the next big number in USO was from June of 2022, which was 91.92. Yeah, 91.92. Okay, so let's not view the weeklies. Let's just view October. So what are we at? 79 right now? $3, 305. So if I bought it at 79, they're saying that it's going to get to 82. Oh, maybe it's not a bad. Hmm. $82 in the next month. I don't know if I want to spend $300, but I could probably do a spread here. Yeah. Because if 79 they're asking 325, 82 they're asking 173. I could, you know, if I expected it to just get above 82, you know, I could, before October, I could completely reduce the cost of my trade. The problem with oil here is that, yes, Biden drained the SPR. It looks like oil is headed up. They're not just going to take that sitting down, right? Like, there's a lot of political manipulation in oil. And I think that was kind of part of what I learned last time is that, you know, like the market wins eventually, but in the short term that I'm playing on, there's a lot of people, including governments out there, that don't want oil to go higher, that can screw it up for you, right? So I might need to do more like like maybe January or in April. Now, if I go out to January, I'm paying like $6. So that's when I took my initial, you know, options trade. That one time that I made a ton of money on in oil, they were way lower than that. So it seems like they're already pricing a decent amount of volatility into oil, although maybe less volatility than we seem to be expecting. But that kind of makes me wonder about oil, that like, yeah, it is headed on up, but I don't know if it's going to be like extreme or crazy or anything. Do you think that I don't know. I think the ECB will raise rates on Thursday. I was surprised when my news squawk came over the wire and said that it was 50-50. That their pricing was 50% that they would raise. I'm not sure what they do. I find it odd that when you look at volatility and everything, that the volatility is pricing that we'll have a volatile day tomorrow because of CPI, but there's not a huge, you know, spike for ECB, when that seems that that's like a way bigger question mark, you know? Like if the ECB comes out and they do raise, that's probably going to crush rates, right? Or it's probably going to squeeze rates, I guess you could say. That was my news squawk said that. My news squawk said that. And that was based on pricing from Euro bonds. So now 12,000 contracts have traded at 23. If they start trading 22.5, how many contracts do you think will trade there? Still seems awfully tight. It is. We are seeing a change in cumulative delta on the 5-year, so a little bit of the flow coming down. Now, that is in line with like the trade that we've been seeing overall today has been a flattener. So them selling just the 5-year end of it, that seems to be in line with the flattener trade that we've been seeing. So you can see 5-year went 2 ticks more than the other two. And the pricing on these options aren't like, you know, in order to get to like really cheap options that are like less than $100, you know, you have to be betting that USO gets above 100, which would be like an all-time, like that would be an insane price. So that kind of shows you that trade's just not that. The price they're giving you on that ain't that great. Now, I didn't say yesterday should have been a volatile day. No. Yesterday should not have been a volatile day, and it wasn't. And today should not be a volatile day, and so far it has not. Tomorrow is, according to the options, when you look at, like, well, I don't know if I can find the story again, but there was the thing on Zero Hedge. Basically, they were showing... Oh, WTI breaks out to new November highs after OPEC data shows huge supply shortfall. Could be the biggest inventory drawdown since at least 2007. Wow. Okay. Somewhere in here they had a story where they showed what the VIX was showing for the week. Basically, that there was a spike in the VIX being priced out for tomorrow because of CPI. And then after the ECB, then it died down for the expiration. But I feel like that the ECB is going to be a bigger deal than CPI. It's interesting, though, that you say that you think that they will raise rates on Thursday. Why wasn't the question, do you think that they'll keep rates the same? Because it seems to me... Trying to do weird things with my face, but it's not working. Seems to me that people are kind of biased towards rates going higher here at this juncture. I'm not entirely convinced. I don't know if I have a strong enough, like, again, going into this contest, if I came into this contest, I'm like, oh yeah, rates are going to go higher, like, for sure. I would totally be going short bonds here, right? Like, easy call. But I kind of see things over the next week still being range bound. Like bonds are kind of pushing lows, and I'm kind of like, I'm not seeing it. I'm not so sure that anything's going to happen. While we're at it, how are some of my positions doing here? Looks like... Looks like they're just kind of trudging along here. REMF 0.57. I sure would love to see that over $1 again, but meh. Well, looks like it's still being pretty volatile. Because it's down 7% today. Yeah, it is. Oh, very interesting. So, rare earth element had this spike here. Got like just shy of $1 and then got sold back down. But because there's dual headlines of one, actions from the administration on, and China like banning the sale of certain rare earth minerals, and the administration taking action to shore up our own production of rare earth minerals. And then some announcement over the test facility that they're making. And that's what like really sent them to the highs. Since then, it's kind of been in a consolidation pattern. It seems to be consolidating around this like 60-cent mark. Shall we go and read the Yahoo comments? That's one of my pastimes here, is reading the Yahoo Finance comments on REMF. Because you get all of these bears. There's these guys that must have like huge short positions on it or something and are just like constantly trashing it. It's kind of funny to read. There you go. Keep the kids in the lithium pits. Keep the slave labor building factory batteries. Keep the electrification nightmare going. And keep USA rare earth minerals in the ground and keep calling it green. Yeah. There you go. And now they're calling this short guy he must be a Chinese national. That's great. I do find it awfully suspicious that these guys seem to be so invested in this company is going to go down. Dudes, be warned. It's doomed to go under ASAP. This is the same comment that he just keeps been posting for like the last 6 months, bro. Big whoop, copy and paste, yeah. There's a lot of people saying that they're from China. There are only 2 major project milestones for the plant demo project. See, this is real. This is what you really come for, right? One is March 24th, once the plant has been built. Facility readiness, go, no go, aka shakedown. The other one is imminent for September 2023. Initially was expected in August of 2023. This is from the Department of Energy. Office of NEPA Policy and Compliance. They will issue a review and must clear the project for operation. This is a must-have. When the review is issued, up to $2.2 million will be released from WEA to REMF to cover expenses for the project period BP1. Then construction starts. NEPA's review should bring major news and associated trading volume. All is explained in the latest 10Q for Q2. Hang tight, folks. Ooh, okay. Okay, I'm hanging tight. I didn't know that it was that close. I thought it was going to be like a few years before they'd have the plant like going. Does that mean I should invest more now at 60 cents? So I only have like $500 in it. Good read. Maybe I shouldn't have closed that. Maybe I should have kept reading them. It's interesting how many people in that thread are calling, because before it was just like only the negative people. You gonna come back to 24? They're gonna touch 24.5 again? And that's kind of what I said all along would happen. back to what I was doing over here. What is the best way to understand economic events and anticipate them before they happen besides normal newspaper reading? Okay, so if you go to Forex Factory, if you haven't done this, I say this all the time, but I haven't to you. So if you go to forexfactory.com, and they have this calendar of all of the upcoming events, okay? And if you click this little folder icon next to it, like for instance, core CPI month over month, it gives you all of this information. It says, here's the source. What does it measure? Change in the price of goods and services purchased by consumers, excluding food and energy. Notes, food and energy prices account for a quarter of CPI, but they tend to be very volatile and distort the underlying trend. Federal Open Market Committee usually pays more attention to the core data, and so do traders. Consumer prices account for the majority of overall inflation. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for their inflation containment mandate. Okay. So it tells you what the report is, and then you can see the latest release. So then you go to the latest release and you read the latest release. And sometimes there's even like I don't think it's here, is it? Here we go. Yeah. So from the release, if you just click at that on the breadcrumbs, the consumer price index bit right here, and then it tells you. Table of contents summary. I think there's somewhere in here. Maybe I don't have it in this one, but sometimes if you go through their website enough, you will find like supplemental information about what their methodology is and how they make the numbers and stuff like that. Okay, but the important thing would be I would go through every one of these economic events, read the description of them in Forex Factory, and then go and read the last report. Like actually go to this and read this thing that they have right here and look at what's in it and what happened last month. And they'll have this description. Here they kind of point out the interesting things in the report and the things that were like unusual or like worth noting, right? Read that. Okay. That's how you'll know. That's how you kind of understand the economic events. First you gotta understand what is the number actually saying. And then you can come back over here and you can look at it and say, okay, how does this thing affect my particular instrument? Well, this is a measure of inflation. So if inflation is higher, then that means that treasuries are going to sell. Interest rates need to raise, treasuries are going to sell. If this number is lower than expected, then treasuries are going to buy because interest rates are going to come down, right? then you can do the kind of the more nuanced understanding of them, which is like, okay, what is the positioning going into this? What is the expectation? So on and so forth. In this particular instance, so to do the analysis, so first of all, I would say that all other things being equal, a number above a core CPI above spot 2 would cause treasuries to sell, and a number below spot 2 would cause treasuries to buy. However, there appears to be a lot of anticipation for this event. So number one, I think that the markets will overreact to this release more than usual. Okay. And you might also see, there seems that, now this one is a little bit more speculative, but just based on what I'm seeing in the sentiment, it seems that there are more people positioned for the number to be above expectation. So there may not be as much of a reaction if we get like a 0.3 than there would be if there was like a 0.1. If there was a 0.1, then treasuries would be, you know, to the moon. They would really spike out of here, right? Whereas 0.3, there might be like an initial sell that then kind of like retraces and like fizzles out really quickly, that sort of a thing. All right? And that's how we analyze an upcoming economic release. Best thing you can do as a trader, though, is go through every major economic release for the month and read the last report. Read the reports. Okay. They kind of tried to make it back up there to the 24, and it seems like it's maybe failing. There has been a lot of trade throughout this area, though. Like, number of contracts that have traded in here is pretty strong. That is what I would expect to see on an auction day, though. Who could say what it's going to be after the auction? The tendency tends to be to sell into the auction and buy afterwards. So let's see. I guess I already know what I'm going to do the whole weekend. Well, make sure you read the CPI report before tomorrow so that you're ready for that one, because that's apparently the big event this week. A little volume in the volatility, anyone needing... Yeah, I don't know. Probably. I mean, it seems like they're all protecting themselves for tomorrow. I'm doing some research over here on that company still, so sorry if I'm quiet. I'm trying to find people on LinkedIn, see if I can find anything interesting. But most of the people involved with this company are pretty quiet. Wayne Rich. I bet that's not a common name at all. Sure, we'll be able to find him easy. No, close. Oh, there's somebody that's a wealth management advisor. That's cool. Ooh, they're gonna push Dak down? It's it where you're finally gonna get the stop run? I mean, it sure does feel like they'd like to go to the 20, to the liquidity at 20. Nope. My news squad just said something about the chances of a hike from the ECB. But they said 1 and 2, but I don't know if that means 1 and 2 that they hike? I think that's what they said. 45% of a chance of a hike next meeting. So that's curious. So the market seems to be moving towards that the ECB doesn't hike, but it's not. You're not really seeing any kind of reflection of that in the treasuries or the flows over here at all. Wow. I'm not having a lot of success here with this, to finding people that are talking about it. Bids might be too thick to push lower. It seems like I don't think that the market makers either way are gonna let off, right? So the whole question then is how many orders there are to actually sell. I'm not convinced that that the volume is there. So that doesn't mean that I would like take the reversal on this, but yeah, the almost likely scenario is like we touch 24.5 again, right? You know what else is? Yeah, I'm sorry. I've gotten into this mode where like I've been looking at stuff, and so I haven't been saying a whole lot. So I should probably get back into like streaming mode now. Here, it's only been I've been deep into it for like 10 minutes. That was like a really long 10 minutes. But hey, one of the things I'm noticing here that I find a little interesting is we did have a pretty big move in the dollar that did move the treasuries and the rest of the markets. But since that time, look at what the dollar has started to do now. Now it's starting to go back and forth quite rapidly in a relatively narrow range. Well, actually, I wouldn't call it a narrow range, but I mean, that's a lot of noise there, man. That's a lot of noise in the dollar. And you can kind of see how the treasuries have kind of turned into the same, where it's just like, I mean, it's like a slight move lower, but it doesn't look to me like there's really actually anything going on here. It's just currency correlations. And that's why I haven't even, I've barely even looked at my, taking a trade here today. I expected that things would be pretty tight and or difficult before CPI. That seems to be what's going on. I would have preferred that they'd stayed at the higher end of the range after that big buying at the beginning of the session. That was probably a little bit of something, but probably mostly the currency correlation. So, and the S&P 500 is kind of, doing similar things. Like after not breaking out of that pivot from before the open, they meandered around there for a while. They've now decided to push the lower end of the range. They breached that, but now they're meandering over here as well. So, pretty frustrating, tight action for anybody that's looking for any kind of a trend or a breakout, right? Michael says, yep. Well, here's our last meeting. I guess I can read that. Did miss a 10-point. Well, just because it moves doesn't necessarily mean that you could have predicted it and that you really had a trade. That's don't fall into that trap. That will the quicker you realize that, the better off you be as a retail trader, right? You want to be the sniper, right? When you really have something good that really suggests it's going to go a certain direct, that you know what the future orders are going to be in the next 30 minutes, then you take it. Otherwise, it's better to just stay out. Let's see. Oh, that's... Sorry. Here's a question for you, Michael. Have you backtested that setup? Why do you believe that is such a valid signal? First thing I hope to teach you guys here. So you got to do your own primary research, right? So you can't just say people online have, like this and like this. No, it's, you've got to have like back tested it and shown to yourself, like, how often is this actually a good signal? You can find something that over 10,000 trades is greater than 55% chance winner on equal risk reward. Like, I'll give you a cookie, okay? Okay, so you're saying when they cross, when the HMA crosses below the 50 EMA, that you take a trade, right? No. Let's do it the real way. Ninja script editor. Strategies. Moving averages. Isn't there one that's like a moving average cross? What's the sample moving average crossover? I'm going to call this strategy multi-cross. Multi-cross. Okay, private HMA. And then, what was the other one? You're using an EMA. Private EMA. Okay. So this will be HMA fast. And this will be EMA slow. And fast was 17, and slow is 50. HMA 50. Fast, slow. Okay. Da-da-da-da. Doesn't like it. Of course, because I just call it SMA fast and SMA slow, even though it doesn't make sense because it's not a simple moving average anymore. But I could actually set this up to be like any kind of moving average we want. Maybe we'll do that next. But EMA 30. Very well. 30. Okay, so now we're going to trade ES on a 1 minute chart. And we are going to go back to 2018 for this. So the last 5 years include commissions. Oh, and then we need to change the strategy to moving average, multi. Oh, did I not name it correctly? It looks like I did not. Oh, name. There we go. Malaysia to ban exports of rare earths. Okay. Now it should show up here. Moving average. Come on. Well, there it is right there. I don't know why it's not showing up under moving averages, but... Oh, you know why? Because it doesn't show up in the right namespace. Okay, but we got the fast, we got the slow. That's all correct. Okay. Backtesting time. Why? Okay, so... Why wouldn't you do 5 years? Pretty simple for me to backtest 5 years here. Should only take a minute or two. Ta-da! Oh, Okay, so this is doing like an in and out, like a this is like doing a reverse sort of a thing. Yeah, which is to say that it stays in until it gets the opposite signal. That's why the risk reward, it's a winning trade is about double a losing trade, and you get a win rate about 31%, but that's not high enough to make up for it. Let's come over to the analysis. Oh, that's a pretty consistently bad strategy. And it did take some trade. Well, it takes a lot of trades. In fact, it takes a lot of trades. How many did it take over here? Summary. 96,000. Wow. So you could maybe filter that. You could probably filter that one. But I don't know if it would actually help you. Like, we could add an R squared filter on it, right? Only take it if R squared is above 80. But just like the crossover itself, it seems like it does give you a good risk to reward ratio, but the hit rate on it isn't good enough. I wonder, coming over here, like what the MAE, MFE is. Yeah, it's pretty random. That's pretty random. Okay, so you're saying the HMA, the slope of the HMA needs to be above a certain amount? So you could come in and you could say, if cross above and let's see here. 0.2. Well, we could just say HMA or SMA fast of 0 minus SMA fast of 1 is greater than. So if we were going up 0.2, and then the same for here. So that's at negative 0.2. Oh, hey, look, we touched 24.5. I should take a bow. Not that it's too helpful. Not that it would be too helpful for a trade, but I was right, wasn't I? I called it right from the very beginning. Like almost, it was like before even 9 o'clock Eastern time. I was right from the very beginning. I was like, yeah, this isn't going to go anywhere today. Hey, that was better. It was a little bit better. It actually did make money on the long trades. I wonder why that is. Well, that looks pretty random, though, to be honest with you. To be honest with you, that looks a little random. Pretty nasty drawdown during the pandemic, too. I wonder what happens if I switch this around. And I make it the same as the other one. Why? I mean, you can see the past 6 months. It's been okay over the past 6 months, but that was before it got crushed at the end of the year. Right? But you can see it right there. Okay, we're running again. I think this might result in no short trades, though. May have just, like, really screwed it up. Yeah. Oh, now that's interesting. Okay, so what we actually did there... Oh, wait, what? Oh, yeah, that's messed up. That's messed up. Okay, but... Man, I have absolutely no clue what you could even be thinking that would make you say that. Like, we're trading today, not last year or multiple years. But what is it about that particular setup that makes you think that it's going to work today if it hasn't worked for the last 5 years? Like, I could come in and I could say, yeah, it works today, but that could just be random chance. It's just noise. Like, in order for us to even see any kind of, like, statistical significance about anything, we need like 1,000 trades. So I think what's happening here is that it does catch, like, trend days. See, so what does this chart look like to you? Especially all of that, right? That's just a chart of the S&P 500, right? So that's why that came out profitable. It's because it's only taking longs in the S&P 500, but when there's momentum, and so you do end up being profitable, but not as profitable as you would be if you were just trading ES. So it's not nice. It's actually terrible results. Because it did do what I kind of suspected, which is that it never... It's a bad filter, basically. Well, I can put it on a 5-minute chart. There you go. 5-minute chart. Oops, wait. I should have waited for that to finish compiling in the background. Yeah, well, I'm doing ES instead of MES. It's the same thing. Okay, let me rerun that now that I've compiled it. Okay, there you go. Hey, that one's actually on a 5-minute. It's a little bit better. So on a 5-minute, you get the win percentage up enough that you do make money, a little bit of money, but look at the Sharpe ratio. Oh, that's so bad. The Sharpe ratio is 0.0. So if you got a Sharpe ratio of over 0.5, that would mean that like it might be worth trading over just going along the index. Okay. 0.07 says this is a terrible strategy, basically. And you can look, when you look at this, it's kind of like, oh yes. It's actually mostly random. Is it possible to use Jigsaw on a Mac? I don't believe so, because Jigsaw uses C#. So it's a Windows only sort of a thing. Now, if you wanted to use the Mac, then you probably want to go to the JavaScript, or sorry, not JavaScript, the Java platforms like, well, I can't remember the names of any of them at the moment. Quant Tower, no, it's long and short. If you took the long only, then it would just match up with the S&P 500, right? Like if that strategy where it was long only looks promising to you, then really what you should do is just put all your money in an index fund. Right? Or I mean you could just trade one ES contract and just hold the one ES contract long for forever, but you know, you might get a pretty hefty drawdown. Bookmap, yeah, Bookmap. You could do Java. Those kinds of platforms. I really can't see myself trading on a Mac though, to be honest with you. The business world is just too entrenched in Windows for trading on a Mac. I just don't think that the operating system is set up very good for you to be doing, because you know you need more than just your trading platform, right? You need to be able to browse and do calculations and you know all these things. And I just don't think that you'd be getting as good of an experience on a Mac, but it wouldn't be like a deal breaker per se. Like I would rather trade on a Mac than not trade at all, right? Anyways. Backtest suggests that the results of the strategy is random. There's not really edge in it. So it just comes back to, why do you think that that particular thing is going to be effective at predicting future orders? Right? Because what I'm doing is I'm coming in and I'm saying, well, here's a piece of news, and here's what, or well, it could be a piece of news or other things. Like we know there's an auction today, right? So there's an auction today. I expect there to be a little bit of selling pressure until the auction, and then after the auction, maybe buying. That's just the overall tendency, right? And I know that because that's historical. And then there's empirical studies from colleges, universities, and central banks and so forth showing this, right? And so I'm just saying, based on these things that are going on, it will cause an imbalance in buyers or sellers. It has absolutely nothing to do with the past price or the chart or anything whatsoever, right? But it's because I have things where there are some situations where I have information that I believe is extremely likely to predict the future orders. If you don't have information that says it is extremely likely that the future orders over the next period is going to be this, then why are you trading? Because traders use moving averages and put them on a chart, and I just took the tools that I had until I found something that seemed to work. Well, markets have fat tails. So in order to show that a strategy is actually effective, you need to be able to test a large amount of data. You can't just say it worked today or it worked this month. You have to be able to look at years of data. So your choice is learn to program and just do what I did there, pull it up. I mean, you should be able to take that code for the moving average crossover in NinjaTrader and just modify it to what you want, and you can try a bunch of different things until you get something that looks promising on a 5-year time frame, right? And you'd want something that has a Sharpe ratio over 0.5, that has the max drawdown that you're comfortable with, etc., etc. And then maybe you could find something that's worth. I've back tested a lot of stuff. I never found one that was like that. That's why I mostly rely on my discretion. So trying to save you lots of grief. You do that, you probably find that technical analysis doesn't work very well, and then you probably save yourself a ton of money and grief. And because what could happen is you might have some success with it for a year, and then it changes, and then you lose all of the money, and guess what? Well, yeah, like you did make some money, but you lost it all, so you're still right where you started at. Except for that you lost a year of your time. Think about that. I'll see you guys tomorrow. In the meantime, stay excellent, team. Yeah, don't miss CPI. It's going to be big.